How to get a business line of credit up to 250,000 and above, up to 5 million and no cap. I am going to be showing you all the different types of line of credit that you can use as a revolving line. What are some back end routes to take in case you're not getting it through these lenders? Perhaps you're going through business credit cards, and I will be showing you a lot more in this jam-packed video. If you're here on the live, please give me a hashtag live in the comments or in the replay, hashtag replay, so I know the time interval you are watching. This is more of a spur of the moment, spontaneous live. So if not everybody is here right now, it is okay. I completely understand. You have your duties, your obligations, you have your family, you got to go to your son's or daughter's events, you want to go out to have dinner. You have a lot of things going on, as much as I do too. But I wanted to be here for you just to show you some options. But before I get into where you can go get started, what are these qualifications, how does it work, let me quickly go through what a business line of credit is, and then I'll jump right into that. We're going to be moving some tabs around here on the share screen. So a business line of credit that is revolving, that means you can take the funds and use them however you like. So if it's kind of like a lump sum, you receive it and you can distribute that into your business however you choose. Working capital, you have expansion, growth projects, marketing and advertising, inventory, any type of equipment, payroll, any business expenses. You can use it for multiple purposes. And I'm sure you're sitting right now in your business wondering, do I really need to use those funds? And how much of it can I get? As well as what are the rates and what are the terms? The very obvious two questions that most people will ask: rates and terms. So I'll get into that in a moment. So I'm going to cover some of that, but whenever you take out the funds out of your account, let's say you get approved for 50,000 and you only need to use up about 20,000 of it, and you have marketing and advertising, you have some repairs you want to take care of, other possible occurrences like inventory, equipment. And so you take out 20,000, you're left with 30,000 in the account, and you only get added on interest on that 20,000. And there's usually a withdrawal fee. There could be a maintenance fee per month. If it's not a withdrawal fee, it can be that. And we take it from there, and you only pay interest on that 20K for this example until you pay it all full. It goes back into your account, and that's what's called the revolving line. You can continue to use it. So not is it 30,000, it becomes 50,000 again. So the next time you may say, I want only 5,000 to take out. This time I'm going to only use it for one marketing campaign, not for inventory or for anything else, perhaps a bigger project or business expenses. So you take out the minimum amount that you would like, and you pay interest only on that. So you can kind of see that if I get an interest on only what I take out, it can be low depending on how much. And the more you withdraw, that can add up over time. So that's how a line of credit works. And all of this will be in the description for each and every one of you to check out. So make sure you guys go into the description in time so you can see it. Before I get started, I know I had a few things that I wanted to go over. So this won't be a traditional line of credit video because this is a live. Hi, Veronica. How are you doing? And so I was thinking about a few things that are like my essentials that I wanted to share with each and every one of you. And I know this probably isn't the best time, but I'll jump into the share screen and show you guys some of these lines of credit programs in a moment. But some essentials I was thinking of the other day, like I'm going to be traveling here soon. And what's been very important to me in my life, sure, businesses, because it's like your baby, right? You treat it, you nourish it, you have it grow for you. It's expanding. Oh, it's a setback. It got sick. I got to take care of it. So like you guys, what I'm doing with my businesses, I'm also thinking about other things that are very valuable to me. And so just a real quick run through. I won't take up much time in this video, but some quick like 3 or 4 essentials to me. You guys can let me know in the comment section what's essential to you aside from business. What do you flourish? What do you cherish? What are your values outside of that? So one of those obviously being the phone. On my phone here, I have your only limit is you. I've had that front screen wallpaper for years now. I haven't changed it because it's a reminder for me of where I was at one point, where in my business as well as in my personal life, I have had a lot of things that went on, and just recently too with the passing of family. And so that's always been a part where I can turn and just look at it before I unlock the phone. It's just a reminder for me to keep pushing. And here's another one. My brother and my dog, he passed away just recently. And, he's on my wallpaper every time I unlock the phone. He's a constant reminder of why I'm here, why I continue to push myself, and also in my business here to strive and help each and every one of you. And I'm sure you guys have your own why and your own things that lift you up. But that right there is a reminder of why I'm in the position that I am in today, because he's made me realize, he saw all my vulnerabilities. He saw me when I was at my weakest. He saw me when I was at my strongest. He was always very loyal, faithful, and overall just helpful in every situation. And so when I remember him and he's always there with me, I have to have that. And just having that image, whether it's there or not, it's just a constant reminder and a part that I reflect on every morning and I pray to every day, because he's put me in a position that I am in today. He's helped me become more calm and more at spirit and looking at myself more on an internal level. But that's one part. Another one, oh yeah, right here, my watch. This isn't anything special. It is a Casio watch. It's one of those above, I think, $30. I think it was priced at 50 or so. But it says G-Shock on the bottom. And it's just a very standard, old school, nothing flashy type of watch. And the reason I like it too is because it not only gives me the time, but as well, it's very easily accessible. I can just start the stopwatch when I go on a walk or on a jog, shut it off, but it's on with me everywhere I go. If you get to see me in person, this is what you will see. Beyond anything, it's just something that I like to have on me, nothing like gargantuan or nothing out of the normal. It's just, I want to have a nice watch, not only to look at the time, but for other purposes as well. And it's always a constant reminder there. Just, it keeps me in balance. It's what it is it's more for like, hey, this is my balance. Somebody's holding on to my wrist, holding on to me, showing me the way, and also telling me, hey, keep pushing yourself. So that's another one on top of the phone, my watch. And then I also have this right here. I know this might not look like a lot for each and every one of you, but my Simply Granola Oats, Honey, Raisins, and Almonds from Quaker, established in 1877. Excellent source for fiber. But I also love it because you can mix it with anything. You can put it in cereal. You can put it into yogurt. You can use however you choose just to munch on, as I was doing here earlier. This is empty now. I had about 2 midway sized in about the span of 10 to 15 minutes. So I finished that rather quickly, and it's a good source of fiber as well as it's a great source of energy, and it's quick access. Now, another one that I enjoy, I gotta have my backpack on me. This right here is the Swiss backpack. And I just love it. Everything about it. I won't get into the pockets, but you can see how many there are just from a quick glance. And it opens up every little spot. And it's great. It's not too large. I can get a smaller one if I need it, a little pouch to carry. It just comes in handy when I'm going and traveling. And it's a good way for me to put so many things in, like my laptop, maybe a little bit of clothes, not too much, the pencils, the notepads, any extra stuff that I need can fit in there, and I can just travel with it, have it with me, go on the flight, on a car ride, it's there, drop it off when I'm at somebody's place in a hotel. Wherever I'm at, it's always with me. So that's another component of mine. Another one that I would say that I use a lot are my Apple AirPods or any form of a hearing device. And reason being is that I can be on a phone call like this. I can answer a phone call if this is on me. Usually I have one on. Right now it's the right one because the left one's not working. I have to go get a new set of these. So it's usually the right one right now, but I can answer a quick phone call if somebody comes in, or if I need to get on a call with someone and I don't have to put it on speaker and it's already there and handy. And then for listening to music, good for leisure, and so forth. So this is a huge essential of mine that I always carry on me. Another one, got to have water. Water, far above anything, is the fuel that I put in this engine of mine when I don't have food in my stomach or thereafter. And it is what constantly pushes me to have the energy that I have and sustain the energy levels. Otherwise, I wouldn't be here right now. I almost chugged this whole thing and I had it about 10 minutes ago. And, I've always been drinking water, of course, like all of us do. And then I'll just list one more thing, and I have quite a few others, but I do, my laptop right here is an essential piece to be able to connect with each and every one of you. That's huge on my list. But another one I have here, just reading, not this book in particular, but having at least a good book when you're traveling or you're sitting somewhere, you're going out, you're on a long trip, you're just at home in the mornings, in your morning routine on an evening. Before you go to bed, I do this. I'll sit there and I'll just read a little bit about a page or two or so, however much I want to get into, if I'm really into it, and just learning and then relearning something that I did. So those are part of the essentials. I know there are plenty of more, but it isn't anything flashy, right? It isn't anything out of the normal. It isn't anything like, well, I thought you were going to tell me about your clothes. I thought you were going to get into the shoes. And I know this is a little off topic of what I'm getting into, but again, to keep it in perspective, this is a live, and I wanted to put it in this format. So what are your guys' essentials? Let me know in the comment section while I continue to go on here. Now let me jump into the share screen. And show you what these types of lines of credits entail. Oh wait, that wasn't the one. Oh, we'll work with that one. That's fine. Actually, let me put this out. Let me put this here, and I'm going to remove this, and I'm going to start the share screen once more. All right, let me re-enter. Okay, this should be the one. Yeah. All right. And so what I wanted to get into, the main purpose of this, I know we went away from the line of credit, but this is not a normal line of credit video. I have other ones that I've listed, and I'm going to leave more information, how you can get started, where to get started, and so forth. I'll be covering qualifications, how it works, and so forth. So we have the traditional business line of credit here, where any industry really can qualify for this. We've seen it amongst all. I know insurance and very high risk industries can be a bit more difficult to fund because of the payment structure and just about the nature of that business. So there could be some exceptions. However, if you don't qualify for a line of credit, we do a very good job of getting you perhaps a lump sum, or it could be another form of financing. Perhaps you have collateral you'd like to give up, and we can work towards getting that. So some unique benefits of doing this with a specific lender, specific company, brokerage, and a various amount of lenders, and you can always get the best offer presented to you, because let's face it, at the end of the day, you're always looking for the best offer. Am I right? Let me hear it in the comment section. Are you always looking for, you're going to be shopping around, am I correct? You find an offer, or if you don't get even to an offer stage, you hear it from myself or someone, and you always do this, you'll go and find other programs and compare it to that. But you have to be careful of that. That can put you in a lot of danger because you're comparing apples to oranges sometimes, not apples to apples. So you have to be careful about that. And because sometimes you go to a lender that's not direct, it could be just a brokerage, and you're unsure about the types of lenders that they carry, and they give you the wrong offer. They give you the type of payment you wouldn't want to have. It's too high. So unique benefits, it's unsecured. same day funding is available. You only pay for what you use. And that's what I said in the beginning of this. Let's say you get approved for 50,000 and you only take out about 20,000 the first time. Well, 30,000 is remaining up until you pay the whole interest on that 20,000 that accrues. It's amortized of a schedule, which I won't get into all of how that works. Just know amortized is a part of the meaning of how it's repaid and how it's calculated how much you would repay. So usually it would be a weekly/monthly. A lot of people end up starting with the weekly repayments unless you have substantially amazing details, minimum inquiries. You're not dealing with a lower credit score than what is desired, lower revenue, utilization. Usually we would like to say up to 10% on what you're using. So 5,000 to 500, limit, and then the 500. So be careful about how much you spend on your credit card or credit cards if you have more than one that you're using. Be careful of those limits that you go too high over it. And if you do, make sure you make your payments on time and then pay as fast as possible. So only pay for what you use. This one here specifically, it is up to 250,000 in a line of credit. This is a true revolving line of credit. Each payment frees up additional available funds for you. This way, you can use the funds again whenever you like to. You don't have to worry about getting access to funds and only having to use it for a large project or a smaller project and worrying about this repayment. But if that's okay with you, hey, you can do it, especially if you're cash flow positive and you don't want this line of credit, or you're thinking, I would like to have a line of credit, which I believe every business owner should have. And then on top of that, you're using the lump sum. You're like, I have a project for marketing and advertising. I have expenses to use as well. You have to ask yourself at the end of the day, what is the meaning of me getting this funding? And I always ask business owners, Joe, how do I get a hold of you? Have you filled out my questionnaire form, Joe? What I tell people all the time too is make sure if you understand when you're getting these funds as well as how much you're getting, but what is going to be, if anything, your ROI on this? Is there an ROI? Is there not? So I spoke with a lot of business owners today and I asked them, you're using this funding for expansion, inventory, marketing, and advertising. You're asking for about $1 million. How long will it take for you to get the desired ROI you want? You're saying I want a 50% ROI. Okay, so you want $1 million, perhaps you won't qualify for a full $1 million. Then if you qualified for a lump sum of it, maybe not. But what I tell business owners to do is perhaps take what you can get and then use it. It doesn't always have to be a 12 to 24 plus month term unless your ROI on that isn't going to happen until about a year's plus worth or 2+ years, and you have the fundability to help you. No, okay, let me go ahead and I have it in the description, but I'll also copy and paste it. One moment. 600 experience, 600 FICO. So when you go through a line of credit, the credit requirements will be higher. Sure, there's some that can accept you with like a 550, 580, but you have to have better time in business. You have to have minimal inquiries. You just have to have better revenue that's consistent enough for us to say we can override that. Perhaps you're in a certain state. So that's just a very standard line of credit, 600 and above. Now, let me continue going through this, but feel free to leave me any comments. Let's see over here. Veronica. Nice. Of course, you got to have the cell phone, right? You can't miss a TikTok video. Kidding. And then backpack. Yeah, me too. I always have it on me at all times. Even when I'm not traveling, I have it in one little spot where it's sitting. It was actually sitting on like a coat hanger. That's where I had it. But when I do use it, it's such a great thing. Here, let me show you guys if you guys are just tuning in what I'm talking about. But yeah, a backpack, it's a necessity, even if you're not in school. When I was in school and college, of course, but I always had the notion that if I'm going somewhere, I need to have something like this that's very sturdy, that's well worth the price. It was over $100, and it's very nice, and it could fit anything in here. open this pocket up. I can put my pencils in there. I can put a calculator if need be, another one there, or whatever I wish to put. I have my documents, I have my notepad, and then I can put my laptop over here and I can do anything anywhere else. So it's very useful, and I'm very appreciative that I have that. Now, let me continue moving on with this. Got a little sidetrack there. So qualifications, usually you'll see about a year's worth of time. And again, this will all be down below in the description for you to go ahead and get started. So year of time in business is usually what we want to see. There are some cases where you would see somewhere in like the 6-month range, but for the most part, a year's worth of time is enough sufficient information for us to see how you're handling your payments, what are your deposits. In this case, we're seeing $25,000 deposited monthly in a business bank account or $300,000 in annual sales. So I'll show you a bit of an alternative too, where you can get in with just $15,000 in a monthly revenue. Do you, Aaron? Nice. What kind of calculator? I don't want to get geeky on all this. I have the TI-89 and I've had the Casio ones. I used ones for chemistry. I use them for calculus and statistics. So I know what we're talking about when it comes to having those gigantic calculators. I never really played games on them, but I would use them so effectively. My younger brother would too. But they come in handy, do they not? And so this is one example of getting a line of credit with $25,000 deposited monthly in business bank account or $300,000 in annual sales. Now, I'll have some alternatives out there as well where you don't have to have so much high of a deposit, where I'm looking at an actual tab that you can't see, but you can also get up to $100,000. So with this one over here, I can help you get up to $250,000 and above, up to $250,000 without collateral, and up to about $5 million and above. There's really no cap if you offer collateral. Usually aging accounts receivables, real estate equipment, but usually the aging account receivables is what's really helpful in this regard. So you see there 600 minimum FICO for the most part, but in some cases there are alternatives. And we can service here with Puerto Rico, Canada. I've helped out people of all types. So you may be looking for a line of credit that isn't, let me move this and I'll get back into it, I promise. You may be looking for something that's over 100,000. This is why I have it set up this way. But the question is, do you qualify? Do you have substantial revenue to get 250,000, 100,000 to 250,000? Most people don't. They usually get on an average about 50 to 55,000 to begin with. And then that limit, like a credit card, increases, but you get higher amounts with the revolving line of credit, unlike you're going through a credit line hybrid program, which I'm going to show you in a moment. But again, everything you guys need to know about getting started will be down below. I'll just run through how all of this works, some quick numbers on how we amortize, and that vocabulary you don't have to worry so much about. Now, unique benefits for, these are just some other products that I can also help offer you with different lenders and different benefits. So there are business term loan programs and so forth that have different qualifications, but that's not what this video is for. I'll try to leave an SBA loan quiz down below in the description. If it isn't there, I'll try to put it in time so you can see for yourself if you truly qualify for SBA 7A 504/8A mentoring types of situations. So we also have an accounts receivables line of credit, AR line of credit. And this is where we can help you based on these unpaid invoices, aging receivables. And the unique benefits of doing this is that you get a revolving line of credit. So it's similar to like the standard secured or unsecured amount. And this is more of a secured format. So facility size, we can get you between 250,000 and no cap. That's where I speak about getting you over 250,000. So a line of credit amount fluctuates as AR fluctuates, as you know, if you've had that, up and down. So that's a very standard amount that you would get depending on your fluctuations, if there are any. If it's up, the better. Usually that's how we look at projections in revenue. The higher you go, the better you'll have it. Now rates, they start at prime plus 2%. So it could be in a lot of cases where you're starting somewhere in the 6% range and above. It can be a little bit higher, but that is what the current market is speaking to today. So rates starting at prime plus 2%, it can be even lower than 6%. But it just depends on how it's being calculated. And I'll show you a few ways how that is. You've probably heard of other companies out there who can get you a line of credit between a 6 to 18%. And then there are other ways of calculating it, but they don't always get you the most amount of funding. You have to have all this documentation that needs to be provided. It's like an online banking solution. Do you? Oh, you're an engineering geek? Nice. What form of engineering? So let's come down here. This is up to 95% financing of your current AR. So that's amazing. We can just practically match how much in these unpaid invoices and so forth you have to offer. And the reason I love this form of a line of credit, securing it with collateral, let me move this, it is because you have more control. Let's say you go through the idle loans, over 500,000, you have to offer some type of collateral, equity, you have enough of it, liquid assets, etc. Okay, I'm giving this up. Oh, it's not enough. Well, what's my other option? I don't have one. I can't do this to get this, or I'm having to give up too much control. It's like when you walk into when you're watching the show Shark Tank, you have the investors, the entrepreneur sitting there looking at your evaluation, and they're invested and they give you a number. I'll take 30% with royalty of 5% for 10 years at 180,000 is what I'll give you. And they give you the maximum amount, or they probably cut you short, or they give you more. And so you have to ask yourself, what can I give up that is worthy for me to do? But then not only give it up, what is the market rates and market terms? But stop looking at the rates and the terms. I've had people today who have given me the cold shoulder. I responded to an individual today who, it kind of sounded like a smart answer, like at the end of his sentence, he said something like, do I understand, or does this make sense? And the first word I put in the message, I said completely, period. And then I went on and I said, right now in the current landscape of our economy, the rates and the terms you're getting are a bargain, but I wish you the best of luck. You know where to find me if you ever need help. And I appreciate you for responding, for giving me feedback and not giving me that cold shoulder, basically. And which they did. If I wouldn't have responded, I'm pretty sure they just would have seen my message and wouldn't have responded back. So a lot of people get put off when they hear, oh, well, no, I was expecting a lower interest of about 2 to 3%. That's not what the market is speaking to. You're no exception. Whether you're doing $1 million, 2 million plus, the market right now is saying that in these industries, in all industries, the prime rate that goes for aging account receivables or any kind of account receivables, unpaid invoices, if you have that set up, is about 3.50% today in the market plus 2%. So you're looking over already 5%. You're already over the 3.75% in the idle loans. However, you have more control. You can say how much I want to give up. You can say, okay, I have this. I don't want to give up all my unpaid invoices. I just want to give up this amount. I don't need to get the full amount. Let me just start with this and then work my way up if I need more. But people, they just don't get it because you ultimately will start thinking about what are my rates and what are my terms rather than thinking about what is my repayment. So many people shut down and they think they're smart ASSs, but a lot of the times people are not educated enough, and it's my job to help you understand that. And I'm sorry if nobody has educated you that way, but it is like this, and this is how it should be working. Now back into the share screen. 4 to 7 days application to funding, and this again is with more of the secured format. If it's unsecured, we can usually get it within a day to 3, within 3 to 5 days. It's a lot shorter. We also have to look at your profile. Excuse me. Qualifications, a minimum of 100,000 in open receivables on 30 to 60 day terms. So that's what we are accepting. In some cases, we can bring you in with as little as 40,000 is acceptable. But we have here a minimum of 100,000 in open receivables on 30 to 60 day terms. 1 million in annual sales is very helpful, but regardless of that, we can also look at other circumstances. It doesn't have to be only 1 million. A year time in business as what's standard with these lines of credits, and then no minimum FICO because you're coming in with collateral you're giving up. Now, another format is an inventory line of credit that I've already helped out plenty of people with. And here are some of the unique benefits of this. Again, it is a revolving line of credit. Facility size similar to the aging or the accounts receivables with 250,000 in no cap. A line of credit amount fluctuates as inventory fluctuates, as you may have known this already, up and down. Rates, they start at prime plus 2%, excuse me. up to 85% financing of inventory liquidation value. So yes, it may be a little bit 10% off, but it is very standard to see this when you're giving up that form of inventory. 7 to 14 days application to funding. So it is a little bit out there, but it isn't as bad as you think. It's not like you're going through an online bank and you're having to wait this extended amount of time. Qualifications, 1 million in current inventory. We have some exceptions, some other programs. 1 million in annual sales, again, exceptions. 1 year time in business, no minimum FICO credit score is required. Now, on top of everything I just mentioned there, we also have these collateralized programs where we can get you loan sizes between 100,000 to 10 million. Monthly payments available at 70% max loan to value. First, second, and third liens we can come in. Qualifications, real estate or heavy equipment collateral that is required. No minimum FICO. Premier program requires 1 million in annual sales. And there are more products here. I'm going to transfer screens in just a moment. But let me know if you guys are enjoying this. Give me a thumbs up. Let me know if you guys want me to cover anything. Right now would be the best time. And I'm going to transfer screens here while you guys are perhaps doing that. So what I'm going to do is I'm going to move this over here like this, and I'm going to just read off a few things off the tab, and then I'll try to transfer to another one so I don't have to flip back and forth, copy URL. I know I've done that in the past, but let's go ahead and continue it this way. So I'm looking at a quick document of my own, and here we can help you get an unsecured business line of credit. And the approvals, they are based on your one part can be credit based, but then the other form of it is based, of course, on your revenue. So it's not enough to just have the time and the 600 plus usually in FICO credit score. We want to approve you based on your revenue. In some cases, we can usually get you between 150 to 200%. In other cases, if you're looking through a traditional online bank, maybe it's 40 to 60% approval of your average monthly revenue within the last 3 or so months. So same day draw is available, limited documents to qualify. This is more of a low doc. If you heard me say low doc, no doc, or high doc. Revolving credit, only pay on the amount that you draw. Reports to the business credit bureaus, usually one in a lot of cases. So it's going to help you build that business credit. And of course, like anything, if you don't make your payments on time, what do you think would happen? Right, it would affect your credit score. And so here we have a year's time in business, as I'm just kind of going over this. Credit line up to 250,000 and above. Simple interest, online access to funds. So it's a very minimal. It can fall somewhere between 6% to 18% or so and above. But it is inexpensive compared to getting a lump sum. If you're going through these term loans, these private lenders, that's when you're getting into the more of a 10% to 20%, usually 15% and above. In interest in a lot of cases, and the total payback depending on your fundability details. So if you're not dealing with any of that and you're like, this sounds all foreign to me, I can qualify for a bank, then I'll have options for you as well down below that I cover a lot of the time. And perhaps you've already checked in with your bank and you know you can, but you're looking for an alternative or something to add on top of that. And so there are a lot of advantages of going through these lines of credit programs. And I'm going to get into the credit line hybrid. This is what a lot of you guys want to see, how you can get up to 150,000 and above, especially with corporate credit cards. With it out being tied to your social security number, you can get 0% between 0% in interest with the right credit cards you find for 6 to 18 months, usually about 12 months. But 6 to 18 months can be pushed out there. And this is a great program for startups with no cash flow requirements. You have no revenue generating in your business, no time. But I'm going to show you in just a second what you can qualify with. So just stick with me. So there are other forms of credit line programs out there. So loan amounts can vary depending on the lender, the program. And for the most part, you see about 6, 9 to 12 months. If we start putting up collateral, then that's where we can get more in like the 12 to 24 plus month range. Unless you can, I mean, you're going more into these 6 to 9, 12 months, and that's just sufficient enough for the most part. Minimum credit scores, like I said, again, it can fall between 550, it can be 600, but you have to have the revenue that a lot of lenders are looking for. So if it's a 550 or 580 FICO score, and they're saying that you have to have a minimum of 30,000, that's what it is. But if it's a 600 FICO, usually it is at about 10,000 or 15,000 in average monthly, lowest monthly revenue within the last 3 or so months. So all of this, again, I hope it's not sounding, it's kind of like when you have you're playing tug of war. You have a rope in between. Have you guys seen Squid Games? Incredible. And you see them tugging one side, pulling, and then you have the other team trying to pull away from you so they can stay on the top of the bridge so they don't have to fall to their doom towards the bottom. And so it's almost like you have to, in the world of capital online, you have to play this tug of war. You have to understand what side you're on, how strong is your team. And so as a team, I mean, I'm on there. So think about it this way. If I'm on the front and I'm pulling that rope towards us, you're in the middle or towards the back, there has to be communication in every step. There is a format to pulling that. And you've probably seen this if you've seen the old man, how he was, kind of a rig to be in the game, and he understood what he was doing. And so, like that old man, in a way that I am, I'm going to guide each and every one of you to your victory, no matter how small. It could be the hugest victory, but what I want, and I ask for each and every one of you, is to, one, be coherent, honest, humbled, but also feedback. Feedback is the most important thing. Today, like I said, I spoke to an individual who kept me on scene the other day, and I go, okay, he probably needs time to think about it. I gave him some time till today. I responded back like I've done with people, and they don't give me anything, so I have to, right? I don't want to be that person just checking in, wanted to see if you're still interested. Like, do I really? No, but it's part of the process. And then two, they would have not ever written anything. And, sometimes I'm not saying that individual or anybody else, but not speaking to one specific person, but don't think you're better than someone. Don't ever think I never think you're beneath me. I never think you're above me. I think you're right here, level with me. Yeah, I put you on a pedestal when I have to put you above me. But what you have to understand is that I'm a human being with emotions. I'm not just a robot on this side that you just put input and you don't expect any kind of output. And so when I'm trying to check in with you, it's not like I'm pressuring you. I'm just asking you politely. And like I said, I'm an introvert and I hate having to do that, to be honest with you. I didn't come from this world where it's like you got to do that all the time. But if it's a necessary thing and I've evolved into it, I just have to slightly reach out. Otherwise, people go cold and they go Casper the Friendly Ghost on me. So pay only for the money you use, fast and easy online application, a 24-hour approval and same-day funding with a lot of these cases. I know I said about 3 to 5, just depends on how much you get. Program, they can be available in so many states, not all. Sometimes they're more just in the US, not outside of that. There are early payment discounts that come on with this. Save on interest. Interest rates can start as little as, in some cases, this is not all of them, but some specific programs can start at like 15%, and that can be higher. So if you're not going through a traditional bank, you should expect the interest rates to be slightly higher. So when I said somewhere between 6 to 18%, that is putting it rather mild. So think about what you're doing with this line of credit, if it's going to be well worth your time for you. So now I have another document here that I want to quickly run through. I know you can't see it on my screen, but I'll walk you through. But there are other ways of getting this type of funding to a line of credit. So I'm going to quickly run through one here where approval amounts are between 150 to 200% usually of your average monthly sales. A revolving line, as I spoke to you about earlier, you pay a draw fee and a balance fee. As you take the money, you pay a fee. And as you have a balance that you haven't paid off, every week you pay on interest charge on that balance that you have, right? So the longer you hold it, the more it will cost you. So now let me move this over. I know you guys can't see it on my screen, but please feel free to contribute in the comment section. I'll usually pop up on TikTok, and that's where I get a lot of engagement as well. So don't feel shy. I mean, I know you probably are not in a position to. I'm not, like I said, I'm not going to pressure anybody to do what they don't want to do. I've never done it once, I'm being honest with you. And all the time that I've been doing this, there's systems that I have built, and I don't ever have to do that. I would never want to do this again if that was the case. So now let me go back on the screen here. So revolving line, as I talked about, you pay on the draw fee and the balance fee on top of those two. So 0% to 3% draw fees. So 0% meaning you have a monthly maintenance fee. Usually it can be about a $20 to $30 or so because you have it for a longer term. Instead of bridging money for a short term, 6 to 9, 12 months, you're asking for longer terms. Thus, you might have more needs for this line of credit over time. You understand your projections. and you understand that you're using it for a wide variety of purposes that's not going to be immediate, but you need that. So you may not even get a draw fee. Instead, you'll get a maintenance, what we call maintenance fee, and you pay a little bit as you go every single month that you have that. And that's just how it works. But some other lenders, like I said, have zero draw fees, but you pay that monthly draw fee, so it can vary. A balance fee example, let's say you have a 50,000 business line of credit and you take out 10,000 a certain day of that week. Each week you'll get charged a percentage of that. Let's say it's 3/4 or 1% per week. So you take the 10K times 3/4 of that, of the 1%, that's equal to the $75 you pay this week to have that money out. As long as you have that money out, that's what you are paying almost on a weekly basis. 75 here, 75 next week, another 75 there. So as long as you have that money out, that is what's happening. It's almost accruing over time. All right. So, but if you hold it longer, then you'll be getting charged next week. And that's what I just said right now in a second. You get a weekly payment to pay it off within 6 to 9 or 12 months. Usually 12 months is what most people want. And that's what most people will get, specifically with better details. So if you take the 10K from your total 50K, what would the payment be to pay it back in 12 months? That's what we calculate. That's what I do on my part, especially with our lenders and our underwriters, once we see the evaluation of what kind of offer we can get you. So let's say it's a $300 per week payment, but it can be any payment. This is not set in stone. If you pay it every week in 1 year, that 10K will be paid off with interest. It's going towards the interest, not towards the balance. And if you pay it off early, there is no penalty. No prepayment penalty on it whatsoever. Early payment discounts, good. And you save big on this. So you're not like, you're taking a lump sum. Think about it this way. You get working capital, however you expect to inject that money into your business. And I'll run through a few examples at the end here. We're getting towards it. Thank you guys for sticking with me. I greatly appreciate it. You get a lump sum for 5 years. Look at these idle loans. I don't care how low of a payment you're paying daily, weekly, bi-weekly, monthly. Sure, that's great. But now you have 30 years of interest. You have all this time that you're accruing over the time going towards the interest, the deferment. You're still paying on that interest. And so a lot of people come to me and they go, well, yeah, I get it. I would have rather had something else here, but I'm sticking to the idle loans because they have a 3.75 fixed interest. And I get that 110%. But what will you do when those funds get depleted? What will happen when you don't have additional funds? What would you do next? That is the real question. And that's the $100 billion question you need to ask yourself. You need to go to bed at night thinking what he said is actually true. But a lot of people, they also think like, this guy is not right. But honestly, like think about what you're doing on a daily basis with that money and not think about it always like what is going to happen in 5 years. Great, projections wise, 5 years from now. But I need to reverse engineer. If I'm going to have an ROI in 5 years, great. But what am I doing with before those 5 years? So think about what you're doing at it from a daily, weekly, bi-weekly, on a monthly basis, every single day, how you're working at it and what's happening. So let's say it's $300 per week of a payment, but it can be any again. If you pay it off every week, in 1 year, that's 10K will be paid off with interest. Again, that's the 12-month, not the 6 or the 9-month. But we can adjust for that, and that 300 payment may be more because you have shorter time. So, and if you pay it off early, there is no penalty, and you save big. So your minimum payment must be paid every week. It's a weekly auto payment, not manual, so you don't have to worry about going into an account and manually deducting it. You know how we sometimes set our credit limits, and we also say how much we want to be deducted when we make a credit card, we get a transaction. So we have a minimum weekly payment of this, monthly payment of that, and you don't have to go in there and readjust. Usually that you set it once, so it's similar. So that will run on the back end for you, which means you'll take time off and not have to worry about this whole part of your accounting process, and you're just having to go into it all and being unsure about it. And now you're having to run back on customers' payments. They haven't paid this, and now you're having to do all sorts of things all in one that can really wreak havoc on you, because I've been there and it's not good. And you don't want to spend the energy and time as a business owner, as the entrepreneur, all the time doing that. You'll usually want to outsource that, give that to your accountant, give it to somebody who can really do it. And if not, that's fine. I still do that in some of mine. So, and if you pay it off early, there's no penalty and you save big. So your minimum payment must be paid every week. You can pay it down and save a bunch of interest. You're only paying on a balance fee while you have a balance. So for example, you get 69% to 1.39% interest cost of funds is what it is. So for example, let's say you get approved for 20,000 and withdraw the minimum of 10,000 with a 3% draw fee, which is $1,300, and divided that by 6, 9, or 12 months, depending on what you have. So we divide that 1,000, let's say for this example, we're going to go into the 12 months, so the weeks within those months. And so that's going to be the 52 weeks. Then that's $25. That's towards the balance. And then you have the cost of capital. If it's the 69 cents you get, which is what everybody wants, the lowest, then you pay $94 per week. So I got these numbers from taking the principal of 1,000 with the draw fee of 3%, which you owe now towards total 1,300 on your balance. Then divided that by the 52 weeks because you get the 12 months. It could be 6 or 9 months. Then we look at different weeks. And then figured out your interest or cost of capital to be the 69 cents, depending on your risk. This number is given to you, and it's part of the amortization, which I won't get into, but that's how it's calculated on a weekly basis. So the 1,300, divide that by the 52 weeks here in this example for $25 plus the 69 cents. That's going to be multiplied then by 100 to transfer the 69 cents to, to an actual value number there, which is the 25 plus 69, which is going to be the $94 per week. You'll be paying until you've fully used up your principal of that initial 1,000 without the 3% draw. So you'll continue to pay, for this example, the $94 per week until you've fully paid out that whole amount that you withdrew. Okay, I hope that makes sense. It can sound a little confusing, but a lot of the times it's very simple once you get it. It's auto weekly, sometimes weekly, monthly repayments. And it's longer terms that can keep your payment down, and you can keep your weekly repayments at a minimum. So it's a huge advantage, and all of this will be in the description for each and every one of you to make sure you pick up. I know a lot of people keep asking, how can I get a hold of you? I need to talk with you on the phone. Listen, I don't mind getting on a phone call. I am an introvert. So I try to, what I've designed my systems, if you fill out these questionnaires, like I have in the description, there should be one that says like funding submission form or funding questionnaire form. Fill out that format. And then what you're going to do is sit tight. I'll send you a thank you email. I'll send you that. And then I'll send you to a thank you page. But I'm going to be analyzing, evaluating it, and then giving you a proper response back on your funding details, on your best funding option and options. It's very thoroughly broken down by the numbers, similar to what you saw here today, but more. And just giving you the whole bonus tips and bonus material. So to a degree, I prefer people fill that questionnaire form to get in touch, because that gives me at least a perspective on what you could qualify for, what file am I dealing with. I may not know you yet personally, which I will get some time to, but at least I get to see from this level what's happening, logically speaking. So that way I can get in and out if I need to in the conversation. And what I do normally is I'll send you back an email, and then I will follow it up with a quick text message letting you know I did that. And then if you need any clarity, a lot of people go, I need clarity, and be truthful about it. Don't just say that just to get me on a call. But a lot of the times it does not need a phone call. What I've explained to you guys here today is right in front of your eyes. This is a great example of everything you need to know. And if there are questions to ask, sure, yeah, send a quick email back. You have my number, send me a quick text message. We can get it out within a minute. We don't have to draw up this long 20-minute, 30-minute conversation that I cannot spend all the time, every single day. And it's nothing to do with you. It's just, I have to save my energy. I have to understand how I'm using it. And a lot of people, they don't know how to use it correctly themselves. And this is no like bashing on people. It's just you got to learn how to conserve and use your energy well. That's why you got to read a book like No BS Time Management for Entrepreneurs, even if you don't think you are one or are one. When you do this stuff, it really just takes away the whole I got to get on a phone call. Because if I did this every day, listen, I don't want to be doing that the whole day. I could tell you how many people want me to get on a phone call with them, and I do get on phone calls with people. I'm not saying I don't. It's just there has to be the right time. And it's not like you're calling into a chase. You're not calling in. You have to still set up appointments to get in with the vice president of funding, to get in to see who collects the most accounts. So you can meet with them and see what you qualify for funding. It's not always, hey, I'm just going to call them. And yeah, maybe when you have private access to them, it's like an underwriter. When I send information to an underwriter, they want to at least know if they get on a phone call with someone, at least they know like what they're looking at. They're not just getting on a blind phone call and getting these outrageous things. And I'm the same way with them. Like I speak to them and we usually keep our conversations short, straight to the point. It can be specific, but it's all conserving energy. We know how to transition from one topic to the next because it's always about how can I do this in the most effective way without me saying 20 to 30 extra words that don't even matter, don't even need to be put out there. That's what I think about every single day is how can I help Sally here in the most effective way where she could comprehend this easily. I'm going to create a story around that, make it simple, and I'm going to create an illustration about how that works. So we're just kind of rounding up the video here. Does anybody have any questions, anything you guys would like to say? Let me scroll up here. It's incredible to me, though, how many people, they need help. Michael, I need your help. But how many of them actually tune into what I have to do? Like right now, like this is so valuable. It's incredible. You know how many people, they just grasp this and then they just go get started in an application. It's a soft pull for the most part. The ones that are mostly hard pulls or like the SBAs, or if it's a part of the process where your credit doesn't even show us some correct information, there has to be more thorough investigation. We'll usually ask you about a hard credit pull, but for the most part, it's a soft pull. And so it doesn't hurt. It doesn't affect your credit. It's just a better understanding of do you qualify or do you not? Like I spoke with various people today who qualify for, they do billions. I'm not even kidding you. You might be here watching. We have millions per year. We have just 100,000, 5,000. Does not matter. Zero. It's not. It's about putting points on the board that matters to me. It's me. It's you showing me. You don't have to impress me. Impress yourself that you are taking this serious. That you're just not looking for funding, but you're saying I'm going to build my credit score. I have people I can help connect you with. There's a video on FICO. I might not have it down below in the description just yet, but you can understand how to get help with that. But just have an overall understanding that I know a lot of people don't want to hear it, but it's so much easier when you go fix your credit. You manage these disputes. You get them off your credit report. You pay your debt. What's the best way to look at paying all of this in this allotted amount of time? You're needing funding in about a month and you have a 560 FICO score. You don't know how to raise it. Well, we got to look at these inquiries. We got to look at what's happening here and make these disputes go away or dispute these and then have them go away as soon as possible. So we have to repair your credit to get it at least 625. I can see it boost that amount, and I've seen it in a lot of cases. So that would make a significant difference. And instead of, one other thing too, I know I didn't get into it, and I said I would. I apologize. So the credit line hybrid program is another one. Let me scroll on over here. I know I've kind of gone ahead. Let me move this screen. So you have the credit line program, as I slightly mentioned earlier, where you can get 0% interest for 6 to 18 months. And now let me briefly get into the share screen here. So you can get up to $150,000 in unsecured no-doc credit cards for your business, even when the banks tell you no. The credit line hybrid is designed to help you, myself, and everyone get funding based strictly on your personal credit quality. Our lenders will not ask for your financials, such as bank statements, tax returns, year-to-date financials for the most part, business plans as a startup, your resume, or any other burdensome document request that most conventional lenders would demand. This is a closed as close to a no-doc program as you can get with business funding. And the best part of this is that you can get approved with introductory rates as low as 0%, giving this program the best terms in the country. Let me highlight what I just put right there. 0%, giving this program the best terms in the country. Fast facts on this credit line hybrid that is actually very spectacular is that approval amounts are up to $150,000. Credit quality is good. Collateral, none is required. Documents, none are required. Why do you need the credit line hybrid? It's a 24-hour pre-approval, 0 interest for 6 to 18 months. A business credit can also be used to help qualify. Flexibility, use the funds to do what you need to do for your business. Even startup businesses can qualify. True no-doc financing program, application to funding in 3 weeks or less, no upfront application fee. Credit approvals up to $150,000 per individual, no collateral requirements necessary, ability to use a credit partners to qualify if needed, no cash flow requirements, can help build or improve your business credit, and many don't report your personal credit, some will. Very amazing. Step 1, you complete the form for a one-on-one consultation with the representative. Step 2, you submit your application with the soft pull on your credit, get pre-approved, qualified in as little as 24 hours with your third step. And then step 4, meet directly with the credit line hybrid advisors and get access to your credit lines. Very straightforward. How to qualify for funding with this program? You have to have 680 plus credit score on with all 3 consumer credit bureaus. Credit card 3 years old with a 5,000 plus limit, must be a primary card, minimum of 2 open revolving accounts within a year and a half of good payment history. Under 40% utilization on all revolving accounts, that's very normal. No more than 4 unsecured accounts opened in the past 12 months. No more than 4 to 6 inquiries per bureau in the last 6 months, preferably less. No bankruptcies within the past 7 years. No open unpaid collections, liens, or judgments. So that's a good thing too, is that you can bring somebody on. They can bring somebody who has a better credit score than you. You can bring them on. They can bring you on, as the account like shareholder in there, and then that can help boost you. So below are these requirements, as I mentioned, either by yourself or a credit partner who has at least 10% ownership in the business, at least 10%. This program does require a personal guarantee from you or your credit partner. If you use one, no authorized user accounts for qualifications. So that'll be down below in the description. Terms you can't beat, how much does it cost, as well as multiple financing options are all in one. Okay, so I'm sorry that I didn't cover that a little bit earlier, but at least I said it and I mentioned what this program does entail. Just to leave it in recap, just know there are a lot of options for credit lines. Yes, you can go through a bank, which I didn't really get into. You can go, usually they'll set you up with the cap lines through the SBA, but not a lot of people qualify for it. It's very expensive. You also have these private lender options where you can get up to $250,000, over $250,000. And can you now hear me? Are you guys able to hear me? I see my mic isn't muted. Perhaps you have it on mute? Let me post this in the comment. Hello. Testing. Did you have me on mute, Veronica? I'm going to turn on the light really quick. Just give me a sec. Okay, so just to recap, just know you have a lot of options. What I've shown you today, there could be more, but we can get you in with aging account receivables, not even aging, any form, unpaid invoices, we can get you a line of credit, term loans, inventory. You have the credit line hybrid program that I just went into. Nice. And so forth. And these are great alternatives through to getting a lump sum of capital. And you can use that however you would like to. And so what I say to all of this, I want you guys really to be careful about who you guys listen to on YouTube. It's okay. Who you guys go to on YouTube and you guys watch video after video. I know you guys are, a lot of you are strung up on the idle loans. You guys see the person continue. I come up with idle loan videos, but I don't only just tell you, hey, do this with that, and I give you insider tips from the loan officers and so forth on what I'm seeing, but I also give you guys the alternative options. And a lot of people, they get put off because like I told an individual not too long ago, yeah, if you want to wait for the market to lower the rates, by all means, go ahead and wait. We see how the auto industry is right now. Yeah, we thought the rates would have been lowered. We thought we would have had a better repayment by the beginning of January. Yeah, right. But if they really don't need to use the funds, then that's a great example of it, that they will continue to fight for the lowest price. And that's what I don't want you guys to do, is stop focusing on what is the lowest price. I'm sure when you guys got an idle loan, if you did, or you're going to apply with one, you were looking at that 3.75% or less or more of an interest. Yes. And you're looking at the terms and you're thinking, that looks rather tasty to me. That looks like the In-N-Out Shake Shack burger of the world right there. That looks like a gourmet burger I can have in New York. That looks like the New York steak. However, understand what you can afford and how much you can take on. And it seems good to have that money sitting there, but you're accruing interest over the time. And then two, you're not fully using that money to your capacity. And you kind of, in a sense, expired the use of those funds, but it's just still sitting there. You run out of funding. I have people today. It's a reflection again of your character. When you can't give me feedback, if I've asked the littlest thing, like, they go cold. I have had a business owner looking for millions and then they don't respond back. They send me an application for this and then I ask them for a certain specific piece of information. They don't want to supply it because they don't want their credit score to be affected. But this is how it works if it's the SBA. You knew what you were getting yourself into. So I don't want to go chase. I don't want to do that. I don't do it at all. Like I said in my TikTok earlier, I move to the next person. It's not solely from a money perspective to me. However, when it comes down to time to talk to business, what we have to talk about, if you're not on your horse about it, I can see that. I can feel it through a phone call. I don't have to be sitting next to you, not always on the other side of the table. I usually want to sit next to you. I want to be right here, putting my hand over your shoulder. Well, not really, like in a literal sense, but I want to be here to help you, guide you. We can sit here and look through this. I can even draw little squiggly lines if that needs to be done. I'm not an artist, but I'll make some good lines in my time of statistics, in calculus and all math and chemistry and so forth, physics, drawing a lot of graphs and drawing a lot of lines. I can do that for you, but if you don't want that, you don't want to have to feel like you're being babied in a sense that, hey, this is the criteria, these are the qualifications, here's what you must meet, here's how it works. Oh, and then you get into the how it works. Oh, well, I don't want that rate, I didn't want that term. I hear it every single time. It's always the rate and the term, but it shouldn't be. It should be the repayment. It's not about the rates and the freaking terms. Excuse my language. It's not. I'm raising that so I can show you. It's not an aggressive way. It's just to show you guys that it's not. It's more than that. It's the repayment. Can I handle this type of a repayment? And if you just look at it solely from getting the lowest, in a sense, the best price, but the lowest price, it shows to me you don't really need to use those funds as much as you say you do. And you don't truly understand the market. And I just spoke to a wide variety of individuals, some of them who think they're better, Some of them think they're better than the individual. They're going to go shop around. I don't mind if they go shop around. Go ahead. And then they come to terms with, they come back to me, or they don't come back to me. They get so exhausted that they just go start an application somewhere. And it's almost laughable to me, because then they come back to me and they say, well, I have this loan. Can you help now? Well, I can. But where were you 3 months ago? See, my job too is to guide you financially, not just getting funding, helping you in your business, the accounting, all of this stuff to help you prepare for the short term, for the medium, for the long term, what this funding could have an impact on, negative and both positive. So what is the positive outcome of you taking 30,000 right now with 6 months? If you told me I'm going to have an immediate ROI within 3 months, I'm going to have at least a 50%, that's going to increase my bottom line by 20 to 30,000. Okay, so it's sufficient enough for us to give you 6 months, because that's almost only what you can qualify for. But when you come into this, like, I need to negotiate my rates, I need to negotiate that I need to get a 3% interest on 100 billion, and I need 40-year terms that don't even exist. Who are we fooling? So that's where we have to go back to the drawing board. But that will conclude everything from me. I do appreciate your guys' time for not the words putting up with, but listening to me and getting a sense of what some of my essentials are, such as Mr. Backpack there. And just some of the things that I appreciate, as well as you guys a lot. I really do. I keep you guys in the front of my mind before I go to bed, in the morning when I'm waking up. I want to know how you're doing, health-wise, spiritual-wise, mentally, physically, etc. And then we take it from there. So that'll be all from me. Appreciate your guys' time. Have a great night.